Candlestick charts reveal when investor sentiment is moving in the bullish direction, bearish direction, or sideways. As we can see over here, we started seeing bullish candles. Stochastics, there's bullish signals like our best friend signal where they had a doji gap up, creating a very strong uptrend. Candlestick analysis uses very simple logic that the Japanese race traders illustrate for us with the open and the close of a candle. They have a simple trading strategy or observation. Where do most people buy? They buy exuberantly at the top. Where do most people sell? They panic sell at the bottom. When we saw this gap up in the overbought condition, our first warning was to start watching for selling. Over the past few weeks, you can see that the market was moving absolutely sideways. Lots of dojis, which represents indecision between the bulls and the bears. But there's one little simple factor telling us what's happening here. They haven't been able to close back up above the T-line. That gives us more of a analysis that the sellers are still in control, even though it was very minor. Now we can see the selling starting, taking us in the downtrend. So right in this area, we can quickly assess whether we want to be long or short. And when our shorts are starting to work better, that's usually an indication that the selling is starting to take control. That same scenario was illustrated in the NASDAQ. Bearish engulfing signal, bearish engulfing signal. Failure at this level. Now a close below the T-line, and they could never get it back up above the T-line. Big, strong potential day a couple trading days ago, but then they opened it lower and traded it lower. That was a good indication. The T-line was still acting as resistance. Stochastics heading down implies there's probably some more downside. It could find support here or maybe support here. But right now, with that analysis, we're more apt to be going short, knowing that's the direction of the market. The candlestick signals in the appropriate area of a trend, such as right here where we're in the overbought condition and see a big bearish engulfing signal, close below the T-line, tells us we're in a downtrend until we see candlestick buy signals and a close back up above the T-line. A doji followed by a gap down gives you very clear indication that the force of the sellers was very strong, especially with what we call our bearish best friend signal. You stay short until you see a buy signal and a close back up above the T-line. The more elements that we can put into our analysis that we're about ready to reverse, when we started seeing indecisive trading, a hanging man, a doji, a hanging man, followed by a bearish engulfing signal, right smack dab at the resistance level of the 50-day moving average, and then the bearish engulfing signal closing below the T-line, that pretty much tells us they aren't going through the 50-day moving average. They're starting to sell off. We now look for our next target, which could be this area or back down in this trend. Essentially, this analysis right here pretty much tells you that the bears are taking control. This is a good time to be going short. You do not have to be a sophisticated technical investor to see what's going on in investor sentiment. As you can see in soybeans, they started selling it off with sell signals, and we can stay short in our short position on soybeans as long as it stayed below the T-line, with the caveat that once we got into the oversold area, notice how there started to be some buying in here. That meant we would be covering our short position because the probabilities that they've hit a support level is pretty good. We take our profits. Today, we went long because of the simple rule that we always profess, that you can go long as soon as you see a candlestick buy signal and a close above the T-line. Stochastics coming up just makes the probabilities that soybeans are probably going to head higher. It doesn't matter whether you're trading stocks, bonds, currencies, tulip bulbs. Anything that has fear and greed is going to be much more accurately analyzed when using candlestick analysis. That'll be it. We'll see you in the chat rooms.